Hello and welcome back to Keeping It Real Estate. I'm Dan Brisse, and today's episode is a special one. If you want to look at what goes on behind the scenes in our business, the nitty-gritty details of asset management, then today's episode is going to be the one you're going to want to listen to. It's an audio from a webinar I recently did for Quest Trust Company's Elite Multifamily Summit. And the webinar was originally presented live for over 300 attendees, but we edited it to be digestible in podcast form, and we hope you enjoy it. So here we go. As you guys are looking to invest, or as you're looking to asset manage, or as you're looking to figure out who's the right general partner to go with, you got to understand the general partner's track record. You got to get to know them. You got to get to know how long they've been in the business, what their bread and butter is, what their teams are like. And you can get this by talking with their investors. Ask for referrals of their investors. And again, I'm going to say right now, if you're in the business long enough, not every deal is going to go perfect. You're going to have some deals that are challenging, more challenging than others. So when you're getting referrals, it's good to know, hey, have you invested with the company once for 3 months or 6 months, or have you invested with this company 10 times over the last 15 years? That's going to be a much more thorough referral. So just keep that in mind. You're going to ask what if their deals hit their projections, and hopefully they have some full cycle deals to share that with you on. And then again, speaking to referrals is going to be the best way to truly understand, is this someone I feel confident and comfortable taking a risk on my money? Because you're investing. It's a risk. Everyone that invests in these deals is taking a risk together. Some of the questions to ask referrals is just, how many projects have you invested in with the group? How's the team's communication in regard to updates on your investment? How's the team's response time when you have questions? Has the general partnership team met or exceeded their pro forma numbers? Have you ever had any deals go full cycle? What the results have been? Is there anything you'd like to see the team do differently? And that's something for general partners on this call right now. I always like to ask our investors, what could we do better? What should we do better? Just give us an authentic review and ask for that. And if they won't give it to you, maybe you send out a secret survey, is that you don't know whose name it is, and they can be authentic with you and tell you what they really think. A lot of times though, you'll find investors are pretty comfortable telling you what they think you should do better, different and better. And then ask them, would you invest with the team again, and why? All right, so getting into the actual pillars of asset management for the remaining part of the presentation, we're going to go through 8 different pillars I believe we have scheduled here. Moving to this first one here, contract to close. You want to know the distance from nearby competing comps. You want to know the year built. You want to know the unit counts. You want to know the location of them. You want to have a very clear understanding of who your competitors are in that submarket. Again, going back to being thorough with your company core values, you have got to know where you sit in that submarket compared to the main comps you have. So you're going to need to secret shop these properties. You're going to need to go in physically, either you or your asset manager, and secretly shop and get a tour of each of the comps and note with pictures and phones, and throw a hat on backwards, make up a little story, and go get eyes on the product so you can see and feel what it's like at these other properties compared to your own. And it's sometimes easy to try to just do a shop online on apartments.com, but it's not going to give you the feel of what these assets are like. Pictures can be very deceiving. If you're in this business long enough, you know that. You can make anything look pretty good. Then you drive up and you're like, whoa, this is not what it looked like online. So I strongly encourage you, if you're going to take the time and you're going to be a great asset manager before you close on that deal, get boots on the ground and physically shop each one of those, and don't ever waver from that, no matter how many deals you own. We've done 18 deals now, and this is one thing we will never steer clear of. One of us on our team will do a thorough shop of all of the comps prior to closing, so we know how to build our business plan, so we're the best. At the end of the day, you just got to be the best in the submarket. You're going to be doing your due diligence. Obviously, you're going to have a physical inspection. You need to be very thorough here. Be very thorough. Take your time. Get the right team members on. Get your property manager on site with you. Get the data now. This is your one time where you're going to be able to go through the full exterior of the property, get on the roof, see the windows, the siding, the foundation, the landscaping, you name it. You're going to be able to get it all. And you're going to be able to get multiple contractors out there with you to give you multiple bids on any deferred maintenance, any CapEx you have. And you're going to want people to do your full inspection. And this is where you're going to go through every single unit, and you're going to note exactly the state of every single unit. Is it a classic? Is it a partial upgrade? Is it a full upgrade? And you're going to be able to build your business plan down to almost a penny after you're done with this physical interior and exterior inspection. That's your goal. Your goal during due diligence is to dig up every problem you could possibly have on that asset. So when you close on that deal, you're fully prepared to be off into the races and execute to really bring this asset to its next value. You're going to want to interview your property management company, and you're going to want to do this before you're doing due diligence, you guys. So I'm not sure the level of people I'm speaking to, so I'm going to leave no investor behind right here. You're not going to be interviewing your property manager when you put the deal under contract. That's too late. You want to be interviewing your property management company before submitting an offer, so that when you are submitting an offer, they're there helping you. They're creating the budget. They're giving you feedback on the submarket. They're helping you decide what you think you can move rents to and where expenses should be. They're with you real early. They're your partner. I can't stress enough how important it is to make that property management company feel like they're your partner and there's good synergy. Without that, it's going to be a miserable time owning these assets. With it, it's beautiful and it's fun. Weekly calls with the management team was something else that we require when we're hiring a management firm. And some of these companies don't want to do it, and that's okay. We just need to know, are you willing to do weekly calls with us, and are you supportive of it? And if you are, great. And if you're not, let us know before we hire you, so that when we close, or even here, we're saying start your weekly calls 30 days before you close, just to get everybody on the same team and to be discussing what's coming. There's going to be so many moving parts between due diligence and close. Better to have weekly calls earlier and be prepared and making sure everyone's on the same page with CapEx and what the process is going to look like from close on. And then obviously you've got closing day. And when you've got closing day, don't forget to communicate with your management team as soon as you close. Most of the time they'll be right around the corner and saying, hey, let me know when I can go on site, or they'll just be waiting for the text for you saying we closed. You don't want to show up at the asset before you close the deal. Unless you have some very unique relationship with the seller. The property isn't yours until it's closed. Don't show up and make that last day awful. So just wait until you get the verbal you are closed from title, then let your management team company know that they can show up. And complete a preliminary audit that day. How are things looking that day compared to what you thought they were? Send your closing update to your investors. Don't forget your investors. They want to know that you closed. Celebrate. That's a win. It's obviously the work piece beginning for us as asset managers, but it's a win to get to close. And then make sure you have your banking lined up, your staffing, review the business plan, do a contract review. Just do the basics to settle into the property. And another thing I'll say too on your first day of ownership is you've probably already interviewed the staff, so they know if you're going to be kept, or if you're not going to be kept by the new management company. But if you're going to keep the new staff, make it feel warm. Make them feel part of the team. This is a feel-good business. People want to work for people that feel appreciated. So make them feel appreciated day one, and it'll serve you well. Okay, pillar 2, management call overview. Just going to kind of give you guys a little bit of what we do with our management calls. Again, you're interviewing these companies. You want to know that they're going to be okay with you doing a management call every single week. And so these weekly asset management calls, you're going to be set up on either Google Meets or Zoom. Team members that should attend this are going to be your on-site manager, because you got to have them there telling you how things are doing. You're going to want your regional manager there, so they're tuned in. You can tell that they've got synergy and are clear on what's going on in the asset. You're going to have any in-house team members, and then some GP team members. So for us, we have our asset manager, and then Mike or myself will join and listen in, and we'll have another person on for taking notes. And that's going to be the people that are really going to run the call. And with that being said, our asset manager is going to lead the call. And I'll probably run over this here in a little bit, but you don't want to have 4 or 5 people talking at the property management company. You want to have one person leading the call, accountable for all of the results and actions that are being taken with your management team. Managing your weekly calls, just discuss who's leading the call. It should be efficient. Not everyone needs to be sharing their opinion. It's going to drive your management company crazy. Less is more here. Make sure there's one leader accountable for that call. And then decide who's going to be updating your weekly tabs. For us, we have a spreadsheet that guides our calls. We've got a pulse tab that has all the major KPIs. We've got a lease trade out tab that tells us where our leases were and where they are now. We've got a pro forma rents tab. We've got a notes tab. We've got a CapEx tab. As you're going on that weekly call, who's updating it? As you're going through that spreadsheet, who's updating it? And is it accurate data? We do have a team member, like I said, that takes notes for us. Just have that team member very clear on if there was a discussion happening or if there was a decision. When these weekly calls happen, it can happen quickly. And if you're not really tuned in, it's a little vague on, did we just decide to make a change there? Or was that just discussing making a possible change? Ladies and gentlemen, this is just the way we do it and the way it's been working for us on most all of our deals, not to say challenging assets, because we do, but this has been a very proven system process that's worked for us. This isn't to say this is the only way to do it. It's just the way we've been doing it. And as we continue to improve and adjust and come up through challenges, we'll obviously continue to adjust that. You're going to want to set the standards, with your management company way back. Just define roles and responsibilities. Hey, this is what we're expecting of our property management. We have a little one sheet that we've now created that has about 12 major expectations, and we just want to make sure that they agree. Hey, do you guys, here's our expectations at Granite Towers. Are you good at this? Do you agree with this? And if there's any discrepancy, share that with us. Where do you not agree? And once we have that agreement, boom, it's kind of like, it's not a contract you sign, but it's a little bit of an agreement saying, here's what our expectations are. If things don't go that way in the future and we need to cut ties, we can go to, number 5, 6, and 7, and obviously they weren't met. So just getting clear with your management team on the expectations. And then when you close, handle first things first. You're going to have 15 different CapEx projects that you want to go do. You're going to have the lender repairs. Get very clear on what's the most important and get them on a list 1 through 10. Make sure your management team agrees with your list of handling first things first to figure out what's going to affect your NOI the most. What lender requirement repairs are incredibly important. You're going to want to encourage communication as well here, you guys. You want your staff and management company to feel comfortable bringing you bad news. And if they bring you bad news and you freak out on them, they're probably going to be a little less comfortable sharing with you what's really going on. So when bad news comes, we say, great, what are we going to do? Let's get some solutions going. Bring us a solution. Don't be afraid to make changes, and hire and fire if needed, and set timelines for that. Incentivizing your on-site staff as well, you guys. You're going to want to just realize, do you need leasing bonuses? Is there an exit bonus that's needed? Is there a year-end bonus that's needed? If you've got a really great on-site staff, which we do on a few of our assets, we give them a bigger year-end bonus than most anybody. And it's worth it. It's worth every penny, because when you've got a great regional and you've got a great on-site, the value of your asset will be so much higher than it could ever be if you don't have the right team members in there. And we like to, give them care packages when you show up. It's just a little something to say thanks, make them feel appreciated. You might not, these on-site folks may be scared when you show up as the asset manager. They may be, well, this is the boss, these are the owners. You want to try to break that ice, make them feel like you're on the team. We're here together. We're here with you. Relax and let's execute. At the end of the day, what matters most is asset performance. Pillar 3, CapEx tracking and lender tasks that are important to be managing and monitoring. So you're going to have a comprehensive list of CapEx projects, including a scope of work for each value add project. Your scope of work is so important, you guys. I can't stress it enough, because your scope of work is going to be a detailed, written out page showing and saying exactly what you're looking for in a CapEx project, line by line, so it's very clear. And when you're going to get bids from multiple contractors, you got to have that scope of work in the hands of each contractor bidding. Otherwise, you're not going to get apples to apples bids. And it's going to be a huge waste of time during due diligence. Remember, due diligence is your gold mine time to get all the data you need. I can't stress it enough. You want your 2 or 3 bids for every CapEx project, get it that day. You want time to be able to go and work with your team to pick the best CapEx projects. And the only way you're going to do that is if you're very thorough during due diligence. And you want those bids prior to closing, because you're building all of this out before you close. So the day you close, you already know, your management team already knows, your contractors already have planned it, and boom, they're on site that day, off and running. Time is not your friend on these deals. Time is your enemy. because when you buy a deal, most of us are going to put pro forma projections of where we are now and where we're going to move rents to in year 1, 2, 3, and 4, and 5. And if you need to add the value, that 1 year passes, now your rents went to another level and then another level. So it's absolutely critical to be efficient here and to continue to refine and hone in on your systems and processes as the lead asset manager of the deal. We like to collect 2 or 3 bids before each project, just to get us really clear on who we're going to use, why we're going to use them, and ideally you're using somebody that's done well for you before, and you can be a go-to contractor. It won't always be the best price, but maybe they are super efficient and you know the job's going to get done, and it's not much more. And don't be shy, you guys, with these big jobs. When let's say you have a $2 or $3 million capex project and you've got an exterior paint of 400 grand. Let's just say you got a 400 unit property. You're going to paint the entire exterior, and you've got 3 bids from 3 different contractors, and you know the person you'd like to use the most, and they're not the cheapest. Don't be shy going to them and saying, hey, we've got 2 other bids that are pretty competitive. If you can get X number, we'll use you guys. Most of the time on the project of that size, they're gonna bend a little bit. There's always a little more that they can give you, and you're running a business, they're running a business. Either it works for them or it doesn't. And it's just a little tidbit for you. But the faster you can execute your business plan, the faster you can achieve your pro forma rent projections. But at the same time, I'm going to say this: be cautious in this market to not overspend. Be certain that the money you're spending is going to move your NOI. And if it's not, that's better with money in the bank. Put it in a 5% CD. So let's sit on it for 6-9 months right now and wait for the market to evolve. Nothing wrong with that. I'm a passive investor and my asset manager says we're going to hold for a second because we thought this was needed and it's not getting us results. We're going to sit on the money for 6 months in a CD at 6%. I'm good at that. And then you're going to get lender required repairs as well. These lender required repairs, just get clear on the list. What hazards are there? Are they electrical hazards, fire extinguisher? What are they? Set clear deadlines, and make sure that your on-site team knows the importance of executing on that and the speed it needs to be done. CapEx tracking, you're going to need to track the info in a spreadsheet. You're going to need to know what your budget is, what the bids came back at, what the actual cost came back at. You're going to have a deadline of, hey, this is when we expect it to be done. What's the status? Get updates, track those payments. You're going to have check numbers, canceled checks. This is something that your property management company should really be doing a lot of for you. But get very clear on who's going to be measuring this. Is it you as the asset manager, or is it your asset manager in-house? We have an asset manager that works for us. Is she going to be doing it, or is the management company going to be doing it? And ideally, you have someone in your management company doing this because they're doing the accounting. They're paying the bills. They're sending the checks out. They're receiving the invoices. So your management company, the way we've done it is all of this right here goes on one tab as a CapEx tab, and it monitors interior unit by unit, exactly what was done and a total cost each unit. And then you're going to have an exterior, exactly what was done, dates started, dates ended, quality of work, total cost, and right there. So when you're done at the end of your CapEx project and the lender says, send me your CapEx, you have it all documented. It's all done, and they will ask for it. And if you don't have it clear, it's going to be a nightmare going back and trying to put it all together. So be thorough, take your time, make sure your property management team knows exactly what you expect. And let's just say you get into this property and you're on your weekly calls, like you set up with Google or Zoom, and you're going through the spreadsheets. You're going to know within the 3 weeks, because you're going to review that interior tab, exterior CapEx tab. You're going to see, are you guys entering the data? And most of the time, they may need a gentle reminder. Your asset manager should say, hey, we've updated 5 units. Where are they? And then they'll get into the habit. So it's your job to monitor. You've got to monitor it. Looking at the unit upgrade tracking, I kind of said this already, just ensure the spending isn't within budget. Is it approved? Is it not approved? It's your job to make sure you're really clear on that. Financed rehab lender draws. So this is very complex and something that we're trying to avoid more and more. You spend so much time on lender draws and lender requests. What can you do to minimize the amount of lender draw work. And what we're trying to do and what we've done on our last, call it 6 purchases, is we just raise all of our CapEx as equity and we don't borrow it. Because with Fannie Mae or bridge lenders, you might get 70% loan to value and then 100% of your CapEx is financed, or 80% of your CapEx is financed. A certain percentage of it will be financed, and then you go do all the work, and then you got to get reimbursed. A way to eliminate all that is just you raise the equity of cash, and you're not borrowing it, and then now you have more flexibility and more speed. But when you do need to submit for lender draws, your management company again should be tuned in and should be monitoring. And you may want to set up an introduction call with the management regional and the lender and let them talk via Zoom and get very clear on exactly what's expected, so that now your regional and on-site team member knows exactly what that lender is going to expect when it's time to do a draw. A couple other statements that could be submitted is a T12 rent roll, detailed monthly statement, schedule of real estate owned for loan guarantors, a personal financial statement for loan guarantors, and an annual budget.
Well, thank you for listening today, and I hope you gained some insights about what goes on behind the scenes in asset management. If you want to join the list to see future investment opportunities and see our weekly newsletter where we provide education about real estate investing and the most current data, check out our website at www.granitetowersequitygroup.com and scroll down to the bottom to fill out the form to subscribe to our email list. Thank you so much.